Satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, Larry Pesavento for TFNN, and also we'd like to invite our guest in to speak right now, Bill Meridian of Cycles Research out of Vienna, Austria. Bill, how are you doing today?
A little jet lag, Larry. It's good back.
Hey, I appreciate it. It's very late for you over there. Isn't it around 10 o'clock or something?
No, it's 7.
Oh, 7 o'clock. Okay.
Yeah.
Are you 1 hour different than London or 2? Just 1?
1 hour later than GMT.
Okay, great. Okay, do you want to tell the folks what you're looking at today?
Yeah, we'll look at the different markets. Let me, as soon as I recall how to share the screen.
This technical stuff is, we never had any of this 50 years ago when we started, Bill.
Oh, I hadn't noticed.
Oh, yeah. You're actually a pretty technical expert compared to me, of course, but it's really amazing what's available out there now. It's just incredible. Instantaneous news. Oh, my God. I used to get it off of Reuters. Remember that? Those were the old days.
I remember... what was the early one? I can't remember the earliest one that we used in New York. Quotron?
Yes, those are you used to get them updated every 15 minutes instead of instantaneous. Yeah, that's for sure.
Yes. Can you see my screen now?
We'll ask them at TFNN if they can see the screen. Al will let me in, and he'll tell us we're ready to go. Yep, we're all set, pal. Fire away.
Okay. And by the way, talking of the early days, when Arch Crawford came up from the Carolinas to New York City in the early 60s, he was the guy who stood there and marked the prices on the chalkboard in the trading room. Yeah, he worked for Bob Farrell. He was in the trading room, and he'd stand there with, yell out a number, and he'd take the chalk and change the number.
Yeah, quarter half. Now they do it in pennies.
Got it. Yep. Okay, well, this is the outlook, and thus far this year's gone. Someone has projected. So the summary is there's a stock market rally into we're in Q4, but the average bear runs 30 to 33 months and retraces 38 to 50% of the prior bull market. We haven't seen that. I'll talk about this the longer term. Rates, I think, is headed higher. Oil is moving lower, and the real estate cycle, we're really starting to see the peak now. And the 1, 4, and 10-year cycle has been the best guide, and I'll just briefly repeat it. I don't want to put your regular listeners to sleep, but the annual cycle in red is just that. It's the cycle that you can see the market is weak in June. You can see it over here. It's weak in September. It rallies in Q4. Then there's what's called the election year cycle. That's the 4-year cycle. And, of course, our old friend Iannali points out that there was this 4-year cycle in the U.S. stock prices prior to the establishment of the Fed in 1913, so it can't be the Fed dressing up the market to make the president look good, and it exists in countries where there's a 6-year election cycle, 8 years, and no elections whatsoever. And then the decennial pattern, of course, is Edgar Lawrence Smith. And you'll note that it bottomed in October, and most lows occur in October in years ending in 2. And there you see it right there. So at the moment, you've got all three pointing up. And that is the composite of the cycles, Q4 only. And as you can see, that, I think, is December 5th. I do have a projected turning point, so I think we're going to get a little weakness there. There usually is weakness between the 5th and the 15th, particularly in technology and especially in semiconductors. So that is coming up. Let me see. That would be next week. No, that would be 2, 3. That'd be Tuesday. So I think we'll have a retracement rally to open up the second week in December. Now, this is a different view. The red bars are the odds that the market will be up in that month. So you read it on the right scale. So you can see August is up over 80% of the time, but June was up less than 20% of the time. This is filtered. You see it's only 6 years. It's all years. There were 2 years past an election, and we had a year ending in 2. So it's a combination of where we are in the decennial cycle and in the what they call the 4-year presidential year cycle. So that's why it's so few observations, and this is the Dow back to 1885. So you can see we really haven't, we were weaker in Q1 than this suggested, but Q2, I told everybody I thought Q2 would be one of the worst, which I think it was. You could see April, May, June. Then we'd have a July-August rally. Now this composite cycle, I think, bottomed in the, if we had the months, it bottomed in the second week, or bottomed in the third week of June, and the actual low was in the second week. Then we rallied up here, and this showed a high in the last week of August. The high was actually in the second week of August. Then it showed a down move, and look at the strong October. And that, thus far, this has been accurate from October 11th or 13th. The market has rallied strongly, and as you see, it closes the year on the upside. So that's just a different way of looking at the same thing. And the blue bars are the percentage gain. The green bars are the expected return, or it's the product of the first two numbers. So in October, well, let's say August, if you're up 80% of the time and it's up about 3%, then your expected return will be about 2.4%. So we're not in bad shape here. So this is the same graph, but this is for the month of December. And you see, on average, you get this little peak here around December 5th or 6th. So the projected turning points, which are dynamic, in other words, from the most recent highs and lows, confirm this little top here. It says 6, 7 here, but it's actually, I think, will be the 5th. And then you see the same type of bar chart into mid-month. And then look at the close of the year, the Santa Claus rally, except for December 23rd. This is heavily reinforced by another cycle, which I'll go into. But that's your average month of December. And again, this period of weakness in here is especially tough on technology, and within technology sector, the semiconductor group, or the SOX. Mm-hmm. Now that's the S&P daily, and I don't have the retracement levels on here. But of course, we got hit. I did not expect it to get hit so hard on Monday, nor did I expect that strong rally that we had on Wednesday. So we're right over that 4,000 line now, which I think we've exceeded the prior retracement levels. And now I want to point out why that October rally, this 3,500, 3,600 level is an important.
Yeah,
go sell some stuff.
We'll be right back with Bill Meridian, folks. Cycles Research, Vienna, Austria.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstat's Tiger Forex Report. Teddy Kegstat breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Are you looking for a way to consistently add winning trades to your portfolio? Tom O'Brien is here to help. Tom O'Brien has been successfully trading markets for over 30 years. A frequent contributor to TD Ameritrade Network and CNBC, Tom O'Brien founded TFNN over 20 years ago to help educate investors just like you. Tom's daily market newsletter, Market Insights, is published every morning when the markets open to give you the competitive informational edge you need to succeed. These newsletters are packed full of Tom's advanced technical analysis and are geared to deliver comprehensive strategies for a successful portfolio. Get Tom O'Brien's newsletter, Market Insights, today and try all of our products and newsletters 30 days risk-free with our money-back guarantee at TFNN.com. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, we're back, folks, speaking with Bill Meridian, Cycles Research, Vienna, Austria. Bill, we have a question from one of our listeners.
Yes.
It is, do you follow trends in the art world? Because, art has been going, catastrophic. Tell us, do you have an opinion of the art world, John? Bill, I know you do because you have a lot of friends in that business, and I know you enjoy art. So can you tell us anything that you know?
Well, one of my oldest and dearest friends is Carol Furman, who is now probably the world's #1 ultra-realist sculptor. And I just had dinner with her 1 week ago, just before I left. And I was at a dinner. There were lawyers, businessmen, and they were all agreeing. They're appalled at the price cheap. Cheap, it's not cheap art. They said it's poor art going for astronomical prices, and they were appalled. And
wow.
So that's telling me that, and my friend just had shows in 4 different countries, and she's now got 18 people working for her, 4 studios, and this is the hottest her business has ever been. And of course, what it's a measure of is too many dollars being printed, and they've got to go somewhere, and people are getting more leery of paper assets, bonds, and stocks, and they want something solid. And so the real estate cycle is also, we'll see that later. I think the art is probably at a peak in the next couple of years. I think it roughly coincides with the real estate cycle, which peaks ideally next year, but I think the top is already in.
Okay, great. Thanks a lot. Please continue with the stuff you have. We really enjoy this. It's stuff that we don't see anyplace else.
Yeah, personally,
so
I couldn't distinguish between a Rembrandt and a Beethoven, but I do keep an eye on that market. And here's the S&P 500. It hit that retracement level. If you remember, intraday, was it October 13th was the low? Was it the 11th? I think it was the 13th.
13th, yeah.
And it took off intraday. So that told me that was a confirmation. With cycles, you project them out, and there are 3 or 4 different ways to do cycles. If they all agree, that's great. If they clash, that's then you have to choose the ones that you think are right. And in 2016, Timer Digest had me ranked #1 for the year, and I relied on the 1, 4, and 10-year cycle. It wasn't so accurate up until this year. So this is very variable, but what you look for is a technical confirmation when you hit a cycle low, and this was it on October 13th. Now, the December review, this is from 1885 to the present. December breaks down in terms of the odds of a higher market from 4 views. All Decembers are up 68.5% of the time. Election year plus 2 years past an election, 69.2% of the time. The decennial pattern, 61.8% of the time. Both the election and decennial pattern, so you've got a 2 in 3 chance of the market going higher, which was that histogram that we looked at earlier. Now, which stocks to buy? This is Cycles Research stock screens. This process has been applied to the Dow Jones 30. Over the last 33 months, this is a month out of date, the long stocks have risen by an amount about 60% greater than that of the short sales and 28% over the DJIA. The short sales were net negative over that time period at minus 16%. Now, the Cycles Research software is now enabled to run the seasonal RSV's relative strength value screen on any group of stocks. Back tests on the S&P 500 from January 2022 through September 2022, the results were the longs were up 30%, the shorts were minus 36%, and the S&P was minus 20%. So I think it works a bit better if you have a larger group of stocks. So this can be applied to any stock group, sector, or index. So this is the screen for December. So when I ran this, which was, I think, yesterday, IPG, which is Interpublic Companies, which is, as I recall, an advertising company, advertising and promotion, seasonal rank, they're ranked number 1 in the S&P for the month of December. The RSV rank is the relative strength. In other words, it is the cyclical picture as measured only by the annual cycle, the seasonal cycle. The RSV rank is a unique value determined by calculating relative strength on about 6 different time periods. So instead of trying to decide whether to use 6 months, 3 months, or whatever, an optimization program was run. And the overall score for IPG is 16th out of the S&P 500 as of the close 2 days ago. Second to that is host companies. Then RTX is Raytheon and DOV, Dover Companies, and then Exxon, Eaton, the auto parts maker. X-Ray is Patterson Dental. HPQ is Hewlett-Packard. NUE is Nucor Steel. Then we have Amphenol. MT&B is a bank company. NIC Air Products, Snap-on, Ball Corporation, the most efficient maker of metal cans, and you can go on down the list. So the way those tests will run is just going long the top 5 stocks and short the bottom 5 stocks. So the ones that are coming in at the bottom, now ROP, Roper, it is 499th out of 500 stocks, and its seasonal rank is 274th.
Wow.
274, so it's in the middle of the pack. And as we look down, the seasonal rank, we're not really seeing the worst seasonal rank is not coming up, but the RSV rank is sure telling us a story. So Pfizer is in here. We see Chevron, Texaco, Ross Stores. You know, I forget the ticker symbol J. I don't remember that one. I was just sitting here trying to figure out what that is. CVS is, of course, the pharmacy. Zebra is the barcode scanner company. Tyler Companies, Hudson Bankshares, JP Morgan, Hasbro. And I go through these. I look for, I see 2 financial stocks there. I also see Textron Electronic Arts, Ford Citigroup. That's the third bank. And it's interesting. We've got not too much technology in here. Well, there's Oracle down at the bottom and Halliburton. So these are the stocks to short. It would be Roper, Pfizer, CVX, Ross Stores, and since I don't know what J is, I'll say CVS.
Well, J should be something real simple, I think, but I can't remember it easy because I don't do any stocks. Bill, I have a question from one of our listeners.
Yeah.
Is this stock program available through Cycles?
Well, the results of it are, but no, I don't sell software or lease it anymore or anything like that. And it was developed over the last 12, 15 years, and we've talked about making it available. It would be too much trouble for us on this end.
Yeah. Okay. Great.
So,
just this question. Fine.
Okay, but the results are you can contact me about these screens. So why do I think there's a high probability? Now, remember I mentioned confirmation. And if you recall the December histogram, it's weak up until about the 15th or flat. So usually rallies up until the 5th, declines maybe into the 15th to 12th, and then rallies again. Well, there's an extra added cyclical attraction, and that is in December of 69 in the Foundation for the Study of Cycles journal, the founder, Ed Dewey, published stock prices, Mercury and space. He studied the conjunctions of Mercury and the Sun. Mercury and the Sun. A conjunction occurs when the pair are 0 degrees apart. Dewey indicated, we'll pick this up when we get back.
As soon as we get back with Bill Meridian, Cycles Research.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Okay, folks, we're back with Bill Meridian of Cycles Research, Vienna, Austria. Bill, would you please continue?
Yes, in December of 69, the FSC founder, Ed Dewey, was getting toward the end or late in his life. And now this story comes from Richard Mogi. Actually, the basis of the foundation is planetary cycles, but they couldn't say that, otherwise they wouldn't get any funding. So in 69, he published Stock Prices, Mercury in Space. He studied the conjunctions of Mercury and Saturn, that Mercury and the Sun, when they're 0 degrees apart, in what he called the 10th sector. Now, he was unable to utter any astrological words for fear of scaring off the foundation's backers. So, when they're conjunct in the 10th sector, which is Capricorn, which can only happen between December 20th and January 19th, this period does occur in a bullish seasonal period December has been the strongest month in any year. From 1885 through 2021, December has risen 68.5% of all cases for a 1.35% average gain, resulting in an expected return of 93 basis points. That's the highest in any month. But if you have this Sun conjunct Mercury, he found that now when he originally did it, I think the market was up 89% of the time in the 21 days prior to this conjunction. In other words, the conjunction was at the top. The percentage has been as high as 89%. That is better than 59% for all conjunctions. It's also better than 68.5%. So that's what we call value added. So at 852 conjunctions, the market's up 59% of the time. That's about average, because the market is up about 59% of the time in any 30-day period. So this is really exceptional. And here we see a graphic. Was run this year. So this includes every Sun-Mercury conjunction in Capricorn from 1915 to the present. And you'll note the tendency to start rallying about 3 days before. And where I have that this vertical arrow, that is the actual Sun-Mercury conjunction. Now you notice there's no decline afterwards. There's just a sideways market. So its value is in the 3 weeks prior to the conjunction. Now we're very fortunate because we have one on, I think it's January 7th, and taking 3 weeks off of that is December 15th. Now let's jump back here, if we can, for a minute. And average daily expected return of the DJIA. Yeah, that's right about here. So in other words, this is going to have a much higher probability of rising this year, 2022, than in any year in which we do not have the Sun-Mercury conjunction in Capricorn. So as Arch used to say, Arch and I used to say back in New York, you don't walk up the down escalator, don't try and eat soup with a fork, don't step on Mighty Mouse's cape, and don't go short in the month of December. So that's what that looks like. And I just wanted to say this is how planetary stuff has helped me over the years. There are just certain times of the year when you can get an edge over everybody else who doesn't believe in this or doesn't use it. And
well, that's good information to know.
We'll turn to bonds, and you'll note that bonds have some very decided seasonal tendencies. This is the T-note, the 10-year note, and you will see, look at how weak March is, which I made a good buck shorting it in March, and again September, and June is also weak, and the third week of December is also weak. Now let's look. This is the daily histogram for the month of December, and note this. Look at that, 17th through the 22nd. Now, for some odd reason, this exists in March, June, September, and December. And the odds of a lower market right there between, let's say the 16th and 22nd, the market is down 82% of the time. Now, how can you miss something like that? They say, as you know, Larry, if you can be right 60% of the time, you can make a fortune. This is 82%. Yeah. It didn't quite work in June. It worked in March and September because the market already started to sell off. So most of the fizz was out of that little drop, or most of the hydrogen was out of the balloon before late June hit. So this is the way it looks this year, and you'll notice it's up around the 16th, 17th, and then down into the 22nd. And I think bonds are in a bear market, and that, of course, that would mean rates are in a bull market. And if you remember the last time I was on, I think I showed the graph that, number one, this has been the steepest rise in the Fed fund rate in 20 years. Now, when I was in graduate school, I had the guy who was the chief Fed strategist for Salomon Brothers was our instructor. And as he said, the Fed doesn't really set the rates. They follow the Fed funds rate, which is the natural, pure lending rate between banks. So in other words, the conditions are getting tight. People need to borrow. They're going to the banks, and the banks go to each other to raise the funds to make the loans. And this is the fastest rise in 20 years. And there's an enormous amount of debt outstanding no matter where you look. So I can't see how rates could continue. You know, rates go into these very, very long periods up and down, as we know from History of Interest Rates by Sidney Homer. So that, I think, is almost assuredly a decline. I just closed out my long positions. There was the 10-year note just retraced almost 38.2% of its prior sharp decline. So I benefited on the way down and made a small profit on the way up, and I'm waiting to go short again. I think if you look at December, you'll note the 3rd, which is coming up. Today's the 1st, 2nd, 3rd. So the next week, you'll notice as a net negative return. Then you've got, up to, there are other cycles, of course, and then week here. Then the strongest period of the month is the 16th through about the 18th, and then it's down hard. So you could buy some inverse bond funds right now, or if you're using leverage, I would wait till the middle of the month, and I would go short.
Bill, did you ever meet Henry Kaufman when he was at Salomon Brothers?
Henry Kaufman. When I'm looking at the wall here, there's my professor, my economics professor at NYU. They made a chair for him, and it's the Robert Cavish Professorship at NYU. He's got his own chair, and I went to that. To that meeting, and that's where I met Kaufman. Who else was there? The tall guy, who was the
Volcker.
Paul Volcker was there.
Yeah.
Kaufman. 4 of the great bankers were all friends of his.
Yeah.
So I met them all at the same time, and I said, Professor Bill Cerubi, 1971. He said, 71. Do you remember what a crappy school this was at that time? Yeah, I wasn't going to say it. He said it.
Yeah.
So anyway, that was fun. But you can see the notes here have reached the 23.6% retracement level, which is the minimum you would expect off of lows. I don't think they're going much higher.
Yeah. Wow.
And of course,
I think the same, but right now I'm wrong. That's for sure. Well, hey, we got to pay a few more bills. Stay with us, folks. We got some great stories here with Bill Meridian, Cycles Research.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Okay, we're back, folks, with Bill Meridian, Cycles Research. Bill, I have a Henry Kaufman story that I'd like to share with the folks here. This was going back in the days of Drexel Burnham, and they were running the junk bond business, and Solomon Brothers was voting on whether they were going to go into the junk bond business. And being the chief economist and one of the founders, or not founders, but one of the managing partners, Henry Kaufman got up and said, ladies and gentlemen, he said, if you are going to go into junk bonds, he said, my partnership will be available at 50% of the current market value. And he sat down, and one of the major guys got up. I don't remember who it was. Jerry Pegman told me this story because he was the right-hand man for Kaufman. And the guy got up and he said, listen, folks, if this tight son of a bitch is going to sell it at 50%, we're going to pass on junk bonds. And that was a true story. I had it verified by somebody else. It was a smart thing to do. Sorry, go ahead, Bill. Please take. Well,
that night when I met Paul Volcker at Cavish's event at NYU, I had just talked to Abu Dhabi, and they said he was down there. I said, Professor Volcker, I understand you were down in Abu Dhabi. I didn't tell nobody I was going to Abu Dhabi. How'd you know I was going to Abu Dhabi? Nobody knew that. How did you know I was there? I didn't tell nobody I'm going to Abu Dhabi, and that was my meeting with Paul Volcker. So,
yeah, he was a real prince, that's for sure.
Bonds, as you can see, have broken the 50% retracement line of this entire rally from 1981. That's, I think, pretty serious. And so the next low, or the next retracement level, is 62% at 105. Mm-hmm. And now this is the broadest tightening cycle in history. This is a percent of the world central banks that are hiking rates. And you can see that's gone straight up. Now we'll go over to gold. This is the monthly histogram, and you can see we're in the bullish period of the year, October through about February. And so I think gold right now, I think it's going higher through the end of the month. And this is one of the few times I've said this all year long. Mm-hmm. Here's the gold daily histogram for this month. And you'll notice we are in December 1st, 2nd, 3rd is the first, the second. Yeah, I'm a little jet lagged. Tomorrow's Friday, isn't it? Yes.
Yes.
And then we go through Saturday, Sunday. So Monday looks like a weak opening for gold. But then look at Christmas time. It looks like the Santa Claus rally that we experienced in stocks. So that's what gold looks like right now. And, of course, it's not including today. And now here's oil. You'll notice, how can you miss this? Look at this is the 2 weakest months. December isn't that great either. So oil may hit $66, I think, before this is over. Mm-hmm. And that's in the next couple of weeks. Now, the U.S. dollar has just retraced 38.2%. And, of course, this peak I showed it the last time coincided with King Dollar being on the cover of Barron's, that green cover. Mm-hmm. So now if you look at the month of December for the dollar. It's the weakest month. It's up 35% of the time. And look at that green bar is the percentage drop. That's almost a full 100 basis points. So I can't see the dollar getting much out of these doldrums here and could go to 105, I think, and maybe a little lower. And then you'll note that January is the strongest month. So if December is the weakest month for the dollar, it's the strongest for the euro. So I'd be long the euro the rest of the month, but turn around and short the euro in January. Now, this is why I'm staying bullish the dollar. This is from the foundation. Price is back to around 18. That's back to colonial times, I think. Or this one goes back to, I think, 1850 or so, or 1820. This big breakout from this triangular formation, then a consolidation, and that's poked up above the prior high. So this is what keeps me bullish on the dollar. And the real world reason for that is all loans internationally are denominated in dollars. So if you want to borrow money, you've got to convert your currency into dollars. So that is underpinning the dollar. And of course, you've seen this before, the peak in real estate. There's more confirmation of this. The low, I remember Phil Anderson, this comes from his book, Secret Life of Banking and Real Estate, or Real Estate and Banking, great book. But I said, hey, Phil, I'm counting out from this crisis bottom down here, 2016, we should hit the accelerating point. It's a gradual rise, 7-year rally, then a crash for 4 years. But it's 2022, and we're already seeing the results. Here we are, 4 centuries of boom and bust. Real house prices and rents from Amsterdam, broadest tightening cycle in history. Look at that. That's going back to the 1600s.
Wow. Is real estate in Vienna still going crazy?
Oh, yeah. Yeah, we have a lot of people moving here from Russia and other places. Sure. Mm-hmm. And I think I told you, real estate in Dubai is up 89% of the time, mostly Russians buying. Mm-hmm. Now, New Zealand housing prices are the canary in the coal mine. Notice the black line is New Zealand real estate prices, and the U.S. usually follows that. So more confirmations of a top in real estate. And here's the home cancellation rates are now at a high in the U.S. This is as of July of this year, that new homes are being canceled at the highest rate. Well, highest rate really going back to 2018. I don't know if the numbers go back further than that. So, of course, that will cut into consumer spending. And, of course, that's going to hit the economy hard. And I think we're already in a recession. So I'm very doubtful about getting a good rally next year. Now, here's the future. No lights when you go to buy your electric car. You have to use candlelight.
I don't know how they're going to charge all those things myself, but what do I know?
Yeah, and as I said last time, the cryptos, as I mentioned, the U.S. government, what was that sound? The U.S. government is coming in with a government currency. That'll mean regulations and stuff that will sink all the lesser cryptos. And, well, I mentioned housing prices, effect of the Russian war, programmer shortage, translation of the Putin speech. He's rejecting the New World Order. We have family values. We're not going to have, sex education for young children. So you can read what you want into that. And then I have, of course, Bill's main recommendations. I showed this last time. Duane Park is New York City's only French burlesque supper club. It's great, but you need to make a reservation about a week in advance. And it's actually very small and intimate and very well decorated, very well run, excellent food. No, and the latest place, Fasano's, is the new jazz club, and that is me to the left, and that is AC Houston, a tap dancer, up on the stage in white in the background. Fasano's is an Italian family from Brazil, and they've taken over the spot of the old Four Seasons. So this is upstairs. Wow. And they've got a restaurant downstairs, all first class, and this place is very well run. And again, you need about a week or more lead time to make a reservation. So those are my two top recommendations are Duane Park and Fasano's. That's where I hang out with them. Yeah. And you can read, I'm at Forbes.com. And, of course, the Foundation for the Study of Cycles is at cycles.org. Mm-hmm. And if you want to look at anything I'm doing, BillMeridian.com.
Okay. Will you be available maybe one more time in December before the end of the year?
Sure, yeah.
Okay, Bill,
yeah,
happy holidays to you. I know you are.
Yeah, well, happy holidays.
And be safe over there. Folks, Bill Meridian.
I'm safer
Research.
here than in New York, I think.
Amen, brother.
Okay.
All right, folks.
Bye-bye.
We'll see you tomorrow. And I'll be doing Tom O'Brien's show in another hour. So may God bless.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, we're back. We have a lot of construction going on here today. We're remodeling the house. Sarah wants to move it 5 inches to the west so that we get more sun. Anyway, we got the stocks are basically down in the S&P, down in the Dow, NASDAQ up slightly, and the Russell down a little bit. Bonds very, very strong. Gold incredibly strong, up $55. So we'll probably see some more action. The good part is this volatility that we're going to see is going to be just absolutely bonkers here coming up in the next few months, and it's going to be really exciting. Tomorrow's show, we're going to have Mr. Shane Smolian, thewolftrader.com, as our guest. Next week, we'll have Peter Elides and Tim Bost and Jeff Hughes as our guests, along with a couple other surprise guests that we're going to have for the Christmas holidays, which will be fun. We're going to have John Person on, of course, ex-floor trader, and he does some incredible work with channel lines on the Dow Jones, which will be really exciting. We had a big move here this week in crude oil. It's up about $9 a barrel. In fact, like $10 a barrel at one time. Big move in gold. The 382 retracements worked incredibly well on those, and I'm always happy to share those with the folks here. I just wanted to show you the bottom here in crude oil because this was a really, really incredible pattern that we happened to see, and we were able to share it. And hold on just 1 second here. There we go. And this has continued up for practical purposes. If you want to defy human nature and learn to do this, you can see where the bottom was here, and then we just accelerated really rapidly. This was actually new lows on the year. Then we had the first 382 pullback, then we had the second 382 pullback, and then the third 382 pullback, and then off to the races. So even a $3 to $5 retracement here is probably going to be bought, especially if it comes in with a ABCD pattern. So anyway, we'll see you all tomorrow. I'll be doing Tom's shows in another hour, so may God bless.